What's up, guys? Welcome to Spill the Beans. I'm sitting down with one of the OGs in real estate and personal development, and just an absolute rock star human being, Matt Andrews. He has run some masterminds that I've actually attended, and just a big positive influence in the real estate world and in the personal development space. So very, very insightful guy, has a ton of wisdom to him, and I think you're gonna love the conversation because we always get into like really deep topics and things that make a big impact. So hope you enjoy this episode of Spill the Beans. All right, what's up, guys? Welcome to another episode of Spill the Beans. Today I got my buddy Matt Andrews. How you doing, bud?
What's up, man?
Dude, excited for you to be here.
Yeah,
so Matt's in town on doing a mastermind with Patrick Riddle, Dusty Keefe, a whole bunch of other friends that have actually been on this show, and a bunch of marketing folks just kind of getting together, having a good time. It's very casual. Actually, it's called the Half-Ass Mastermind. So it's
ham. Yeah. Yeah, it's really just a group of friends that we do a lot of business together, right? We're interacting all the time, and so it's kind of one of those where we plan a little bit less than normal, and we just let conversations breathe, man.
Dude, and that's where the magic happens.
That's what we do, right?
That's where the magic happens.
Yeah.
And so you have the Family Mastermind, which is a lot of info marketing, a lot of influencers and stuff in there. Why did you start that?
Yeah.
And what was the impetus in order to start that?
Yeah.
And then how has that like affected your business? How has it affected a lot of other people's business?
Yeah.
I mean, we talk a lot about masterminds and stuff on here, but just like I don't think there's a shortcut to success other than getting yourself in the right room, right?
That's
Putting
it.
yourself around people who are moving in a similar direction, similar path to you, and dude, just by being in that room, you naturally fall into opportunity. So
100%, man.
Give me your back. I don't even know the background on how you started.
Yeah, I'll give you the quickie on it. Well, I mean, what you just said is absolutely right. Getting in the right room with the right people, right?
Yep.
So, I've been in business in some way, shape, or form in real estate for 20 years. 1999 is when I started, right?
Yeah.
Makes me feel old now,
Yeah,
right?
dude.
But
a long time.
Done a lot of cool things during that time, and continue to build on things. But every leap, whether it was flipping houses, keeping rentals, starting masterminds, starting educational programs, whatever it was, every major leap that I took, I can pinpoint it back to a room I was in with a sphere of influence, a group I was in some cases, especially early on, getting in some marketing masterminds where I almost felt like I snuck in and didn't belong there, right? Yeah, hanging out with
most of us probably fall into that.
Right.
Right.
We all do, right?
Yeah.
It's not abnormal.
I don't belong here. I'm not qualified to be in this room. I can't believe I'm in this room.
Exactly. So getting in
but
the
it
right
levels you up.
Real
it
estate
forces
room,
you to level up.
You have to. You either have to level up or you got to leave the room.
Yeah.
That's what it is, right? So my real estate business, like running it like a real business instead of tripping over myself for 5 years like when I started it, that went up to the next level because I was in the right room, right people. My marketing game and how I marketed to buyers and sellers and then parlay that into education, that was because I was in the right room with Ryan Dice and Perry Belcher and Roland Frazier, these great marketers, right? So every point that I have propelled forward or had a successful 2 or 3 year period where it just went even faster than before, it's all about the people in the room. So to answer your question, I started as a house flipper, flipped from 2000 to about 2008, rehabbed and held some rentals. The market dropped out in 2008. My business 8x'd between 2008 and 2012, buying crazy amounts of foreclosures, doing, the beginning of what we call wholesaling now, right?
So you got your legs taken out a little bit or no?
No, I actually,
really?
I got very lucky. Very lucky, right?
Why, a lot of people are like, oh, the economy happened to me in 2008 and got my legs taken out and my business got crushed and this happened and that happened. What was the difference between your business and other people's businesses?
Because I was so incredibly brilliant. No,
it must have been you. It must have come in.
So, right place, right time. I was in Tampa, Florida, right at the nexus of the foreclosure market. But I was not over leveraged in 2004, 5, 6 when everybody in Florida owned 12 condos. It was a real thing, right?
Yeah.
Like everybody, people that shouldn't have even owned one house owned 10.
Yep.
I was not over leveraged. I had a few things. I sold a ton, not knowing what was coming. I sold a ton right before the crash.
Got it.
A bunch of duplexes.
You just saw the market going like this, and you're like, hey, I can't not cash in on some of these things. So let's sell these things.
I didn't think it was going to
money.
drop off.
Yeah.
But I had capital. The market dropped out. Suddenly, that capital's buying power was 4x what it was even the day before.
Dude, it was insane. Nobody.
Right?
Well, I got into real estate. I was like in the trades and stuff from 2005, and I interned in real, and I had a brokerage license and all that kind of stuff. But I wasn't an investor until 2009. So to me, as a new kid coming in, I was 23 years old, right, trying to buy my first house. Financing was not existent for me.
And you were coming into what everyone thought was the worst market
exactly.
of all time, right?
No, right. I've never done a deal. I'm a punk ass 23-year-old kid, and it's the worst economy ever, right?
Yeah.
For housing. Was it different for you who had 8-10 years of experience in real estate?
Yeah.
And now you got some cash and you have experience. Were you able to go and get financing still at that time?
I was able to go and get financing, private financing, from a lot of investors that I'd previously been selling to.
All right. So private money.
So
was
2008,
easily
I
accessible.
converted buyers into a source of capital.
Got it.
Big time,
Yep.
right? And really 2008 to 2012. So for me, I was hitting it hard to get 1 or 2 deals a month prior to that, and now I'm getting 10 or 15 a month,
dude,
almost effortlessly.
Dude, it was
so
effortless.
To me,
it was like MLS, which one you want?
So to me, it was a disconnect because the whole world was saying, oh, like people would say, "What do you do?" "Oh, I'm in real estate." "Ooh, how's that going right now?" And I'm like, "Pretty good."
Yeah.
But the whole world was saying, "Worst market ever. Nobody could borrow." All the investors in Florida that were my competitors 6 months before were gone, leveled, right? Because they all had 100 houses, mortgaged to the hilt. So to me, it was almost kind of like, wow, like I feel like, I learned that lesson of zigging when everyone else is zagging right there. And to me, it just solidified the lesson of do the opposite of what everybody else is doing. Man. Everyone's running away from this stuff. Figure out a way to bring money into it.
So what are you doing? Are there parallels from that market to this market that you're seeing right now?
Yeah, well, there are parallels, but I think it's really different. What I see right now, and again, I'm not a financial analyst.
Are you investing right now?
Not a ton. I mean, I probably do a deal or 2 a month.
Okay.
And I probably am keeping a deal a quarter or something like that. Another couple $100,000 house or something like that, but not aggressive at all, right?
Are you passively investing at all?
I mean, I've got rentals in Florida, Indy, Michigan,
do you lend to other people though?
I lend to other people.
Yeah.
Yep, I'll do some. I raise capital. We're starting a fund this year. I actually want to talk to you about that.
Yeah, we should talk about it.
That's going to channel money into deals in the Family Mastermind, and so. But no, not like I was, back then. I've always bought when catastrophe hits, right? So I've been buying Bitcoin lately, right?
Yeah.
And crypto. I know you're
me
into
too,
that
man.
too.
I bought. Everybody's like, it's dipping,
Yeah.
and so I bought more, and then it continued to dip, and I was like, just
dip.
keep buying,
Yeah.
right?
Yeah, and that's what I've always done with real estate and with anything I've been into. It's like, man, when people are not focusing in on it, it doesn't mean there's not opportunity. There's still opportunity there. So in March 2020, I bought Bitcoin at 5K.
Yeah.
Love it. That worked out well.
Yeah.
Everyone else was like, why would you buy that? Who knows where it's going to go? I'm like, it's not going to zero.
Yep.
Bitcoin at 5K, I'm buying that.
Yeah,
right?
for
and
sure.
I went in, for me, I went in what I would consider big, and it paid off really well. I ended up selling a lot of it at 45, right?
Mm-hmm.
Real estate's the same way, but the difference now versus 2008, what I see is in 2008, single family homes, my main mode, wasn't an asset class. Hedge funds were not buying single family homes. Equity funds were not interested in it. It was not a thing. They were buying apartments like you do. They were doing bigger level deals, commercial deals, stuff like that. But they weren't touching this stuff, right? So, us doing a lot of these deals, me and Lee Carney and a few other friends in Tampa, we brought the hedge funds to our town. Basically, we kind of ruined the opportunity for everybody. But we had 3 or 4 years of that before they came.
Yeah.
So 2008. 2009, 2010, we hear the hedge funds are going to come, they're going to come. They didn't really get there till the tail end of 2011, and then 12, 13, 14, they paid 125% of asking price of everything, and they just scooped it all up and kind of changed the market, right? But we had like a 4-year head start where we had it all to ourselves, right? The difference now, one big difference is it's an asset class now.
Yeah.
There is money, there's money waiting on the wings. If there were to be a 50% drop off in any market in this country, they'd be going in and buying aggressively.
Which is why I don't think there would ever be a 50% because they wouldn't allow that to happen. If it dropped by 20%,
I 100% agree.
Dude, it'd be coming off the sidelines and being deployed like crazy.
So people ask me, when's the dip going to come? When's the market going to correct? I say never.
Yeah. I mean,
At
dude,
least,
so
especially in
much
Florida.
money.
In Florida, it's not going to keep going up as fast as it is, but it's not going to do this. It's just not going to do that.
And I think
it will slow the rate, but it'll keep going.
I think people are more aware, right? There's these submarkets like a Florida, like a Texas, the Carolinas. That's where a lot of people from the Northeast, the Midwest, and out West are going. Like they're going to Arizona, they're going to Las Vegas, they're going to Texas, and I just don't see those markets getting hurt.
I do not.
Maybe there's little subsections of certain markets or something that have some bureaucracy
There'll
or
be
something
pockets.
going on.
There'll be something
right?
happen in New York where something will lose.
Oh, dude, for sure.
Something will lose 50% of the value in a certain part or something like that.
Well, dude, I think the Midwest, Midwest portions of the Midwest, California's going to get hurt. Northeast is going to get hurt, man, because people are realizing I can work from anywhere. I can. So if I have phone and email, I can get my job done.
Yeah.
And dude, in Manhattan, I was looking right when COVID hit. In Manhattan, stuff was still listed for $1,500 a square foot.
Yeah. It's crazy.
$1,500 a foot.
Man,
right?
it's nuts.
So if you want to go live in Manhattan, Upper West Side, not even like Upper East Side, the super fancy part, or on the park, like just something decent, right? $1,500 a square foot.
Yep.
So if you're buying a 3,000 square foot, townhome, you're paying $4.5 million for that, right? You come down here, and you can get a house on the ocean in Charleston, South Carolina, at that same time for about $800 a square foot, half the price.
I should have bought some of those.
Dude, and you have a lot, you have land, right? You're on the ocean, which is, it's like a park. You run your dog, do all that kind of stuff. You don't have ambulances running up and down your street all day, every single day.
Yeah.
The taxes are a fraction of what they are up there. The cost of living down here is way lower across the board, and the quality of life is way higher. So I think this whole shift is like, everybody realizes that now. There's a boatload of New Yorkers, New Jersey, Connecticut people coming to South Carolina now, and prices have all jumped up.
Yeah, and a lot of them are coming straight through down to Florida. Too.
Yeah, and then they're coming straight down to Florida. So I think that those markets are going to be real strong. It'll be interesting to see what happens to the New Yorks and the Northeast and the some of these areas where people are moving from.
Yeah,
over the
I think
course
some of those will get hit, but again, on the overall though, I think we're going to see a continued increase. And like I know the
reality is
projection-
supplies low across the board in every market.
Yeah.
I
mean, we're not going to see last year's growth every year, right? Because that was insane, right?
Yeah, it was
but
wild.
we're still going to see growth this year.
Yeah.
There will still, and even if New York or California were to drop off, there's so many other markets that that we know there's money waiting in the wings for this, right?
Wild, man.
And it's not going to get to where it was.
So how has that changed with your buying strategy? How has that changed with like how you underwrite deals, dude? When I came up through 2009, right, to 2018 before prices really started going crazy, and so I had a 9-year run during that same time that you did.
Yeah.
And I remember thinking like, now you look back at deals, and you're like, I would never pay that for a deal. Well, guess what, dude? Are you going to be able to buy
you would know,
for $20,000 a door or $25,000 a door like you could 10 years ago? No, that's probably gone, right? There's a new normal in place now.
Yeah, the way it affects me is I want to be in
that?
and out. I want to be in and out faster.
So you're just in and out.
Like if I'm gonna be lending, if I'm funding deals, I want short time horizons. I don't want 6-month projects, 8-month projects. Single family homes is what we're talking about, right? The reason I like them is because you can get in and out fast, right? I also like the versatility. I do a lot of lease options and owner financing. I like that especially in the Midwest. Michigan has been great for that, right? Buying stuff.
Ohio, Michigan,
buying stuff
Indiana.
in that 150 range, and then servicing a population that is just underneath the traditional qualification for funding. Being able to do owner financing for them. Like, I mean, we've got 30% cap rates on some of that stuff.
Insane, man.
It's insane.
Because you bought it at the right price.
Because you bought it, yeah, exactly. So that kind of stuff, I like the options.
So
but
what are
for
you
stuff
doing
that I'm putting money into, I want my money back out pretty quick.
And that's how you're mitigating risk for the most part
right now. And I want to be able to take advantage of crypto and the other stuff that we're talking about. You know, when that dip happens and when it goes from 60 to 32 in a week, man, I want some money to be able to do that. I don't want it tied up in long-term projects that that are going to take a year to get my money out of. I like it faster. So you're a different animal with the the syndications and the multifamily stuff. But for me, I've always liked being able to get out quick on a single family home. I liked having 3 or 4 exit strategies on one single piece of property. To you, that sounds like, man, that's tedious and that's like too much. I know because we've had this discussion. Right?
I do the same thing. I just do it because I'm from the single family world, right? Right. And that's what I did for a long time. Up until 2017, I was still doing single family, but I was doing multifamily collaboratively for about 5 years, and then I went all in on multifamily in 2017. But dude, all my multifamily strategies come from the single family world. Dude, I've essentially seller financed or done like installment contracts on properties that I bought and properties I've sold in the multifamily side, in these commercial type properties. And I think that gives me more tools in my tool belt to be able to have multiple exit strategies. I think that's a really important part that a lot of people don't talk about, is like, you can't just have one exit strategy when you're doing a deal, man. You got to have 2, 3, 4, and the more exit strategies, the more tools you have in your tool belt, the less likely, like, quantity leads to quality.
Absolutely.
Right? And so
Yeah.
the more tools in the tool belt, the higher likelihood that you're going to actually not lose money. You will make money, and maybe it's not all the cash right up front right now, but you're not going to lose money, and you can sell it for your price point. You get paid out over the next 5 years.
Yeah. Yeah, and if you can't do the best thing, you can do the second best thing, or
Yeah,
the third
for
best
sure.
thing. And that's what I loved, especially about that 2008 to probably like 2015 period. We could wholesale them, we could rehab them,
Yeah.
we could, and I started doing a lot of this, fix them up, rent them, package them, and put them together with 5 or 10 or 15 properties and sell those as a package
Love
to
it.
the overseas investor.
Yep.
Have 4 profit centers on every single one of those.
That's what we were doing
install
too.
property management, get paid on that, and so there were so many ways to profit from that. And I said, look, I'd like to do this with this property, but if I can't, I could do this. And if I
Yeah.
can't do that, I could do this. If I had 2 or 3 of 4 good exit strategies on one single family property, I felt like I was so protected I could do that over and
Yeah.
over again. It was also part that we were buying stuff at 50, 60 cents on the dollar
It was
with
wild.
regularity, so that covers up a lot of mistakes probably too.
For sure. Dude, I remember some of the first properties I bought when I went back up to Cleveland in like 2012, 2013.
I love Cleveland.
I was buying houses for $7,000 to $15,000
Yeah.
that were already rented for $600 to $700 a month.
That's insane, I know.
Dude, you get all your money back in 18 months.
Yep. No, I've got
You
some of
know?
those 15K houses up there.
You're
Yeah,
like,
man.
holy, and you're in a rough area, whatever, but some of them, turned over, and all of a sudden you're putting just as much money into it as what you
Yeah.
bought it for. But then other ones, I owned it for 3-4 years before I sold it, and the
Yeah.
tenant never moved out.
Well, when you're buying
It's
them
like some
that,
of the
too,
best returns I've ever gotten.
you could triple the price and sell it on owner financing.
Exactly.
It's like I bought it for 15, I sold it for 50.
Yeah.
It's just like, and
it's a good deal for the buyer.
And then they moved and got out of their loan 2 years later, so I did it again.
I know.
So like that kind of strategy, having those multiple exits, 100%.
No, man,
Now,
it's good.
now the difference today is I personally don't see as many opportunities for these single family homes to have all 3 or 4 of those exits, and so that has changed for me.
Yep.
The lease option owner finance strategy is pretty good in the Midwest,
Yep.
but I don't have what I had in Florida in 2010 where I said, dude, this property, I could do 5 things with this,
Yeah.
and they're all awesome.
Yep.
And if I do the worst of the 5, it's still awesome,
Yep.
I kind of just got spoiled, I think, a little bit,
But I think it's a new normal, right? Like I've
Yeah.
had to retrain myself to realize that I'm not going to be buying houses or apartment buildings for $25,000 a door anymore in
Right.
B-class areas, right? I got to expect to pay $70,000 to $100,000 a door in most of these areas. And when you go out to Florida, dude, I got a package sent to me like 350 doors for $100 million. That's like that's a lot.
Yeah.
And so that's hard to conceptualize when you're used to buying it for $50,000 a door, So I've had to retrain my brain in order to go through that. Tell me a little bit about, all right, so you're still doing some real estate deals, but where's the rest of your income coming from?
Yeah, so, Family Mastermind is a great kind of ground zero for a lot of opportunity, right? So my goal there and what I tend to spend the majority of my time in is setting up wins for partnerships with people that I have nothing to do with, right?
Yeah.
Making the connection,
Yeah.
saying, hey, Tim, you need to talk to Neil because you guys have a natural synergy here. I think you could do this over here in this area by just repeating what you're already doing, right?
Yeah.
Setting up those kinds of wins. Doing that puts me in line for a lot of opportunities too, most of which I don't take advantage of personally, but I've started to build an equity portfolio of companies out of that. So
Love it.
that's one source of income, right? Starting to look at companies and fractional ownership of companies or rev share from companies like rental properties, and the partnership being the thing that I value the most.
So tell me how you structure that. So somebody comes to you and they say, Matt, I'm trying to grow my business, right? Can you come in and give me some one-on-one attention or coaching, consulting, whatever?
Right.
And you're like, listen, you could pay me either a fee or
Yeah.
let me take a percentage of the growth that I help bring to your business. So
Yeah.
you're doing $1 million already. Say, hey, give me 30% of all the growth. I'll make the right connection, spend some
Yep.
time with you, hop on a call. I think that's a brilliant way.
Yeah, my
to,
sweet
to
spot is
take
like
a business that's already past the proof of concept phase, and then all of a sudden just help them scale, dude. Because that's a tough area. Doing $1 million to $5 million is like, hey, I'm making money, but I'm not I can't bring on the executives,
Yeah.
and the C-level executives and the $100,000 salaries and stuff that I want to in order
Yep.
to grow. But with certain strategic connections and partnerships and ways to bring that in on a fractional basis, dude, you can really scale up big
and
time.
the strategic connections that you just nailed, what makes it work, right?
Yeah.
So my sweet spot, and it's not like everyone fits into this box, but my sweet spot is a minority position, 10 to 20% of either of ownership or of rev share with essentially what I call like ownership kickers, right?
Yeah. So if you sell, dude, I still get my 15%.
Yeah, you totally got it, right? So that 10 to 20%, and only take on situations where, based on the strength of my connections and Rolodex alone, I know that I can hit it out of the park for them for my piece in it, right? Now the whole other side of it is vetting, valuing the partnership, believing in the partner, because I want it to be something that somebody else or a group of other people are running, 70, 80%, right? And then I have to feel really good, and this is the biggest piece, right? Because I want to make money, I value the partnership, and I also like fun. I have to feel like I am knocking it out of the park on my contribution.
For sure.
Right? So if I have 20% of this company, I need to feel like I'm bringing 40% of value. Like I could justifiably ask for 40%. I don't want to, because I want to empower that business owner. And the whole idea is to own, a fraction of a lot of great companies, that many of which can provide an ecosphere and work together.
Love it.
Right? So part of it has been opportunities coming to me. Part of it has been, look, I'm running this many events a year. It makes sense for me to own a live event AV company, right?
Yeah.
So I own an AV company now, basically the guy that I worked with for 10 years. We just formalized it and invested money into the equipment and everything. And now that's an asset for members of my Family Mastermind. So that, my crew is at cost doing a lot of jobs for a lot of the members of our group. It's just another asset, right? So that's not even one that I'll make a great revenue driver for me. It will be for the primary owner, right, for Chris. Yeah. But for me, the primary benefit is it's an asset. Yeah. It's an asset of my ecosphere, right? So there are certain companies that I'll either buy or start, hopefully buy.
It's more value for other people to want to partner with you,
and for
because
other
it's something else that you can bring in, right?
For other companies we own together. So a lot of the publishing arrangements or things like that in the info space, I'm doing that because there's already natural synergy with our buddy Patrick Riddle over here. Yeah. Or there's natural synergy with Lee Arnold or with you or somebody where it's like, man, if we did this and built this, Tim's already done this. Yep. Boom, look at this. You know, and so I am I guess for lack of a better term, a professional dot connector. Yeah, right? Yeah. And so that's where the equity portfolio is starting to come into play. So that's great. Talking about revenue generation, Family Mastermind as a membership fee-based group is good income there too. But it's the equity portfolio building. It's the participation.
Yeah. People are like, oh, well, why are you teaching, Matt? Why you're just because you can't do, so you go and teach instead. Like, dude, that's not the case.
It's so you can do
more. It's
the
collaborative effort of how much more you can do. Right.
Exactly.
Well, dude, I know, and something you kind of glossed over, but I think is a really important differentiating factor between everybody in our circle, right? Is that you are value driven. Your value proposition is give more than what you receive. Yeah. And dude, that's why you have staying power, right? That's why that's why you've built the community that you've built, is because you give so much more than what you take. And that's what the relationship capital that you've developed. You've made so many deposits into that account. Yeah. Right? That the account just keeps on growing and growing, and you have never not that you've never withdrawn, but dude, you deposit way more than what you ever.
I've never overdrawn.
You never overdrawn.
I've got good draft protection,
dude. And I see that the people who are at Pat's event this week, right? They're all value givers. They're not takers. They understand long-term relationships. They understand relationship capital. They understand. Dude, it's a small world. People are like, well, let me. You know people who jump into a mastermind and it's just fucking take. Yeah. And they get spun out within 12 months.
What can you do for me? What can you do for me?
Dude, they get spun out immediately.
Yeah. Well, the only way to lose in a mastermind is either have lied about getting in, about your qualifications to be in, right, and to misrepresent yourself when you're there, right, and to not find somebody to plus or help. Yeah. And I know we can say the same thing if there's somebody that we've ever seen that we're in a mastermind with or is in our mastermind, and it's just not the right fit. At the end of the day, if you ask them, and I don't do it because it's a pointed question, but who did you help? Yeah. It's crickets, man. Dude. It's crickets, right? And the people that focus in on helping, and you talked about relationship capital. We talk, and it's similar concept, relational equity. Right? Yeah. So, and I appreciate you saying what you say, because I feel like I've worked hard to build relational equity with the right kinds of partners so that a few months down the road, an opportunity comes, I've got a relationship with a person, a year, 5 years, sometimes 10 years, sometimes 12, 15 years, like there were guys that I set up relationships with in 2003 that I'm just now finding how I really want to work with them, but I built the relationship, I built the relational equity, right? I led with, how can I plus what you're doing? That does honestly excite me. And if you do that and you build that relational equity, when you need it and when you need to make withdrawals, it'll be there. What you and I both know, where a lot of people miss it, and where 2020 exposed a lot of people in the world, was they had not built relational equity with anybody, and now they were trying to make withdrawals, right? And when there's nothing in the bank account and you're trying to make withdrawals, what happens? You get the red notice, right? And so what we saw in this nation, and maybe worldwide, was a lot of people that needed relationships more than they'd ever needed them in their entire lives, and they hadn't built them. They hadn't built them, right? So the lesson there, no matter where we're at, is build relational equity, do it now, and do it big before you need it. Because when you need it, it's too late. It's kind of like, oh, I need money in the bank. Well, you should have put money in the bank over the last 10 years. You didn't, right? So that piece of it, and you and I know, numbers, deals, lead gen, all that other stuff is all part of business, right? But it's the relationships that make the long term. The best deals that you do are because of the relationships you have, not because of your calculator or your special numbers or your algorithm in your head that you know how to what to look for. It's the people you know how to put together, right? And so it all comes full circle. So you know, running the legacy group and me running the family group, like we're in the nexus of opportunity, and we are working to create those relationships, and we're just starting to tap the potential of our spheres of influence, right? And the cool thing is the more we get, the better we get at what we do, the more it enhances the relationships around us. So that's what grows.
Everybody else makes more money, and then all of a sudden it's that whirlwind effect, right?
You
don't reap what you sow, you reap much more than what you sow.
And it's fun because we don't want to do this alone. You don't want to do this alone, or I don't want to do it alone. You know, like entrepreneurship can be lonely if you do it wrong.
Very much so.
So for me, a lot of the mastermind concept and my mastermind and your mastermind, it's about feeding us too, in terms of, look, I want to do things, I want to create revenue and build businesses and stuff, but what I want is also the camaraderie, the fulfillment, the creative, positive energy. And when you get 150 people together, like you do, like it's opportunity overload, right? So for you and me, it all becomes about vetting. Vetting opportunities, managing bandwidth, managing capital, time, and how do we make the most of our position of leadership to create those wins. But what a great problem to have, opportunity overload, right?
It is, man. It is. It's when you develop the relationships as well as you have, right? Now it's not about success or failure. Now it's just varying levels of success, right? Because you have opportunity overload. It's not about, I can't find any way to make money. It's what's the best and highest use of my time, and where can I add the most value, my talent, right? And that's now where you can start spending your time. There's a lot more fulfillment to that. The happiness factor increases too,
We just talked about the kids' books, that you're working on stuff. Like that's something with my kids, 8 and 4, right? And you got young kids too. Like we met each other through business. We know each other as real estate investors, right? But I guarantee, just on what we talked about today, we're going to work on something that is family-based at some point that is going to help our kids and help a lot of our entrepreneurs' friends' kids, right? You're already doing it with the books you're publishing and the curriculum you're building around that, right? Like I'd love to take that to almost a mastermind type concept but for families, And so this is where it happens, right? So the reason I hang out with you and the reason I hang out with the guy behind the camera over there, Daniil, and guys like that, is we had a great discussion about our families this morning, about legacy wealth building, and I'm around people like you so that I can find that next thing for me that is engaging and provides the highest and best use of my skills and my talents.
Let's spend some
Can't
time
do that
on that
without people. Yeah,
man. I think I was watching a documentary yesterday, actually, about wealth and how making a lot of money actually brings out some of the worst in people. Like you got money and then you want to, like, I don't know, get plastic surgery or like expose it, and that you put too much value on materialism and the corporate culture and all that kind of stuff. What are you doing to protect your kids or help build confidence in your kids, in themselves, right? To make sure that they don't succumb to that shit, right? Because we're not, dude. We like. I'm a blue collar kid from Cleveland, Ohio, right? I like nice things, but I don't need them, dude. Right? And I have nice things, but if it all got taken away, it wouldn't hurt my happiness factor because I appreciate everything that I do have. I have the gratitude piece in place. and I want to make sure, I was thinking about this, dude, in the middle of the night last night for 2 hours, I couldn't fall asleep. And just like, how do you convey that to your kids? How do you make sure, like there were multiple kids in here that, on that show yesterday, where like two of them, two high school age kids commit suicide, right? Because they weren't confident enough in themselves. And their parents were out there, getting plastic surgery and putting value on handbags and shit that doesn't matter.
Hedonism. Yeah.
Exactly.
Yeah.
How do we make sure that that doesn't happen, right? Like what are you doing? How are you preparing your kids for that, making sure that they're aware that it exists, but at the same time, like creating value from internally instead of external?
Yeah, I think there's two things that I'm working on, and that, like the book that we were talking about that you wrote about money and getting kids thinking the right way about money, that's a big piece of it. So there's a piece of it of getting our kids to think about money and what that means and what it represents, what it allows you to do, and then also staying away from competitive comparison. There's kind of two different things, right? So first one,
comparison is the thief of happiness.
Absolutely, right? And that's the biggest piece that I've really been working on with my kids. But from the money standpoint, and I've said this to them since they were little, we have a call and response, right? Why do we work? To make money. That's what they answer. Why do we want to make money? So we can help people.
Yep.
And that's the refrain, right? Why do we work? To make money. Why do we want to make money? So that we can help people. So from the time that they could speak, 2 years old, that was the answer they gave back to me.
Yeah.
Now, they will decide as they grow up if they believe that, but they know what I believe. They know that Daddy works, and we have some nice things because of that, and that's great, but that's not the purpose of money.
Yeah.
Right? There are some rewards that we have, and that's great, and that has its place. The primary purpose for money is as a tool to be able to help people.
Love it.
Right? And so we try to show them that with charity. You do a lot of charity work, we do a lot of charity work, and we've started charities in Jamaica and India and Nepal, and I want my kids to see that, and we're going to be taking them to those kinds of things. Right now they've just seen pictures and videos and stuff, right? Because we're in some dicey areas.
Yep.
But so showing them that and teaching them that that's the purpose in our family for money and how that's a tool for good. And then the other piece of it is the competitive comparison, right? Teaching my children by trying to teach myself and remind myself all the time that my value should never be tied to somebody else. Right? And I should never judge myself or base my own self-worth based on what you're doing. I could go, especially in our sphere of influence, the kind of people we hang out with, right? And this guy over here, and like our friends.
Doing some big things.
I could point to 10 people today at the cookout we're going to go to later today. He's better than me at this. He's got more of this than me. He's got the ability to do this way beyond me. Like I could literally go down the line and show you how I don't measure up against each one of them. Right? But there's some pretty good things about me though. Right?
For sure.
And I'm better today than I was yesterday. So
that's the only comparison you should make.
That's what I try to teach my kids, right? Is it doesn't matter what they're doing or what they have or how well they play piano. My daughter's taking piano lessons, and she watches these kids that are ahead of her, and they're like amazing, and then my son Tucker's got some speech issues, right? And so he certainly has the ability to look at other kids who speak much clearer than him in his class, and could compare himself to that. So we don't talk about that. We don't compare to the kids. We talk about, man, you're speaking so clear. You said that so well. Remember a few days ago, you couldn't say that, Tucker? Now you can say that.
Yep, it's amazing.
So basing our value based on how far we're coming, that on Tuesday we're a better us than we were on Monday.
Yep.
And just completely eliminating competitive comparison as a means of self-assessment, self-worth. And I think schools can mess kids up that way, and I think society and just kind of the social discourse and what's going on in the world can certainly lead to this comparison. That's a very natural thing, and we do measure ourselves against other people as human nature, right? I'm trying to teach my kids that is not the basis for your self-worth.
For sure.
The basis for your self-worth is growing every day and your ability to grow to help people. So then it goes back to, what are you doing for somebody else?
Love that.
And I think a lot of that, if we can do that, and again, my kids are young, and some of this is theory for when they turn into teenagers, right? But if we can get them thinking about other people and build empathy and a sense of, I am not the sun that the solar system revolves around, right? I am a piece of this, and I can help other people along the way, but it's not me. It's not about me, right? And I fight myself. I fight that all the time, because it's real easy to think about yourself, you know.
Yep.
And so anyway,
Man,
those are the big pieces, man.
I agree 100%, man. I think, and it's so easy. Like, you know, before social media, you compare yourself to the Joneses in the same neighborhood,
Yeah.
right?
Keeping up with the Joneses.
Keeping up with the Joneses, and they were always a little bit ahead. But now you're on social media. Now you got to keep up with the Kardashians, right?
Right.
Like, or keep up with somebody else who is exponentially further ahead. And it's not even that they're further ahead. They're on a different chapter of their book than you might be in your book.
And it's an illusion too. You have no idea what's
totally
really going on.
Oh, it's fucking fake, man.
Like I have my guess
it's
of
a highlight reel.
Yeah.
You don't ever see the blooper reel.
Right.
You know?
Exactly. That's exactly it. And that's the other part is, you know, and that's the part that I'll explain more to my kids as they get a little bit older. Like what you're comparing yourself to is not even real anyway.
Mm-hmm.
That's your perception of them, you know.
Yeah.
There was this commercial years ago. I mean, it's a long time, like a Pepsi commercial of the band manager for Lenny Kravitz pulling up the tour bus to a gas station, right? Lenny Kravitz gets out and goes to the bathroom, and this tour manager he is just sick of being a tour manager. He's sick of the endless parties all the time. So, and he looks at the clerk behind the cashier's desk, and he looks at him, he's like, oh man, what a great life that must be, just working a cash register, right?
Yeah.
And then it shifts and it goes to the cash register guy. He's looking at the manager, and he's like, man, if I could be the manager of Lenny Kravitz and a rock band, it'd be the most amazing thing in the world. Both were looking at each other, wanting what the other had, and both were an illusion, right?
It is.
It wasn't great working at 7-Eleven, and apparently it wasn't great working for Lenny Kravitz or whatever, but they both thought, we do that all the time. I'll look at you and I think, well, Tim's just got it. Look at what he does. Oh, I'm watching your highlight reel on Instagram.
Exactly.
You know?
Exactly.
And that's what you should be. You should be celebrating those wins. But
I
competing against the best of you all the time, that's a losing proposition for me.
100%,
Right?
man. And like, you're talking about all these rock stars that are going to be at this event that we're going to.
Yeah.
Dude, likewise, they're all better than me in some capacity,
Sure.
right? And there's probably some capacities where I excel, you know, and I can teach, and that's the beauty of these masterminds. But if you go
that
in
excites
thinking,
you though that there are other people better than you.
shit,
at tennis,
yeah,
right?
man, that's the room I want to be in.
Yeah, that's
right?
inspiring versus competitive, right?
sure.
That's like you are a champion for those guys being better at those things than you.
Yep.
Versus a detractor,
Yep.
right? And going back to keeping up with the Joneses, you know, when I was growing up, I remember my grandfather and my dad, you know, saying, "Hey, that's Mr. Jones. Mr. Jones drives that Cadillac because he's built a company. He's worked, you know, he's helped people. He's given jobs, stuff like that, and you know, he's got the rewards for that. You know, I feel like we're living in a society now where a lot of parents are in some way telling their kids, that's Mr. Jones, he's driving that nice Cadillac. You should pick up a rock and throw it at that Cadillac because that's not fair."
Yeah.
You know, and it's
Probably
like,
screwed somebody in order to get there.
and if that is the seed through which you are, or the lens through which you're seeing life, then you will always fail. You've already failed, right? Like that's a failure as a parent. That child is going to grow up with a skewed view of how things work. Oh, Mr. Lucky just got a car or something like that, you know, and it's going to feel like unattainable because they don't understand what it took to do it.
Yep.
So when we start to detract from people that are creating something, whether we like what they've created or not, but we see the spoils that and the rewards that they've got, and we're demonizing that piece of it, we're stealing our kids' freedom and the ability to dream, right?
Yep.
And so it's, you know, your books touch on that stuff, you know, and so we need that, but it is definitely something that I work every day to make sure my head's straight, and I'm constantly in a conversation with my little guys and my little girl to just really have that conversation all the time, talk about it, so that it's not something we talk about when they're 15 or 19 for the first time or whatever.
I think
this is how we think about it. This
that's
is what
the importance,
Andrews
man.
do. You know?
They mimic everything that we do, right?
Yeah.
Whether we know that they're paying attention or not, they are always paying attention.
Yeah.
And I think the best thing that we can do is show them the right way to do things, right? Make sure that you're giving back. Make sure that they see you giving back, delivering turkeys on Thanksgiving, or working in a food kitchen or soup kitchen for Christmas,
100%,
or and comparing, not in a way of comparing yourself to others, but in showing them what life could be like, right? Driving them through a tough part of town, you know, and say, hey, this is it. Well, this is what happens if you use "I want" instead of "how can I earn."
Yeah.
Right.
Simple lesson.
This is what happens if you spend a whole dollar that you earn instead of saving 50% of it, 50 cents, and then spending only 50 cents on it. Like this is where you would. So do we have something to be thankful for? Yes, we've. I don't have anything to wear. You know who doesn't have anything to wear? Kids in friggin' Africa who are eating mud pies, right? Like let's think about what you actually have and focus on being appreciative and grateful for this stuff.
Yeah.
And it's something I'm like, very conscious of, and at the same time, like, how can I do better with this?
Yeah.
How can I further instill this into my children? Of, dude, it's not normal to grow up on the ocean, right? Like, like on an oceanfront house. It's not normal to have a mountain. Like, my son's like, hey, when are we going to go to the mountain house, or the island house, or the river house, or the normal house up in Cleveland, right?
The normal house.
Or the normal house, right? Or the beach house.
Right.
And he tells his teachers that he's got all these different houses. And I was like, that's not normal. Like, but he's 4. He doesn't know any better.
Yeah.
And he doesn't know.
He doesn't know that's not normal. And,
right. He doesn't know it's not normal.
And it's okay at this point for that, because that is your life, right?
Yeah.
There's nothing wrong with that.
Yeah. But it's like, I don't want them to just see the highlight reel, right? I want them to understand, hey, here's how Daddy can afford this, is because he owns these assets that pay for that, or he's turned this house into an asset because he rents it out when we're not there, and other people are able to enjoy this home, and it allows us to then go there, 4 weeks a year and utilize it, right? My daughter's starting to conceptualize it because she's 6. She can do some math now. She knows how to read and write, and going through that whole process. And so, really, she wants to go and buy a house before she turns 7.
Yeah.
She doesn't really understand it, but I'm going to sit down with her, with Cameron, and we're going to actually call up different homeowners, and we're going to look at properties on Zillow,
awesome.
and we're going to make some offers. We're going to call up Uncle Matt to give us a loan on private money.
Yeah, man. I'd love to fund your kids. That'd be awesome, man.
And dude, we're going to put together the entity. We're going to go to closing. We're going to walk the houses. We're going to do everything, so that way she can see the concept, right? And then she's going to see the money come into her bank account. And then sometimes when it doesn't, because there's an eviction or something, you know what I mean?
Yeah.
Like,
and whether she goes into real estate, that lesson, she will take that, different areas, because that's going to bring confidence, that's going to empower. And you said, the word gratitude, that's one of the hardest things, I think, to instill in our kids, especially when they have a lot and it seems normal, right? Not that you've spoiled your kids or I've done that to mine. I think we've done a good job of instilling gratitude, but as a kid, that's a tough concept, right?
For sure.
And as an adult, gratitude takes practice for me, right?
Dude, it takes experience. It takes wisdom.
I don't just wake up. Yeah, I don't just wake up automatically gracious for what I have. I have to have a purposeful time to do that, right?
Yes.
And so for me, and going back to relational equity, the biggest thing that I need to work on having gratitude for is not like the money and the things that come from that. Like, I almost kind of feel like, hey, I went out and did that.
Yeah.
The gratitude has to be the freedom that gives me and the ability to grow the relationships. So every day, I spend time in the morning, and it's always around gratitude, and it's always around a relationship. Every single day, right? This morning it was my dad, right? This morning I sat for 10 minutes and had gratitude myself, and just thought about, I am thankful for my father, right? And I texted him afterwards, and I just said, I love you, Dad, and he wrote me back. And so this morning was him, right? It's very regularly my wife, Lindsay. It's my daughter, Penelope. It's my son, Tucker. It's my mom. It's my brother. It's other people in my life. But having a time of focus where you think, this is a relationship that's important to me. Here's why it's important to me. Here is why I need to continue growing that, and I am thankful for that. That's it. That's an easy thing to do if you plan it, right? And you can always stop and think about a relationship you're grateful for, but you got to plan it. You almost got to put it in the schedule. So for me, 5:15 to about 5:30 in the morning, that's gratitude time.
Love it.
And I read and I drink a bunch of water, and I get a workout in. But at some point there's 10 minutes of uninterrupted gratitude time.
It's powerful, man.
Having our kids do something like that, and labeling or identifying the key relationships in their life and the importance and the priority they should give to them is something we can do at every level. And so there's, I'm sure there's some tools, and there's probably some stuff we should create together to do that. But that's where it's at. And so if we teach our kids empathy, relational equity, and gratitude for the relationships they have, a lot of the business and empowerment, being able to help people, that is going to come, right? But those, it's easier said than done, right?
Yeah, man. No, I think I love those 3 things. I love the idea of creating some, like, tools, right, or
Yeah.
some sort of exercise that parents can do with the kids and really appreciate that together. You know, I'm in this quandary in my life right now where I remember watching a documentary back in probably 2014. Talked about happiness, the happiness factor of like.
Oh yeah, I remember that.
If you
all the different people all over the world.
Yeah, I was on PBS or something like that, right?
I remember.
And so it's like, it doesn't make a difference if you make $50,000 or $50 million a year. Once you're now up to 50,000, that does differentiate happiness because you don't know where you can get your next meal from.
You're looking at the bottom end of the hierarchy of needs.
Right,
you got
exactly.
Food, shelter.
Exactly.
Yeah.
Once those basic needs are met, though, then it doesn't matter how much money you make above $50,000.
Yeah.
Because you're you got food, you got shelter, you got clothes, right? And you have the right safety elements. Beyond that, everybody thinks, hey, if I make more money, I'm going to be happier. It's not the case, right?
Yeah.
Like, I have nice things in my life, and everything that I've achieved, it's like, okay, that's cool. Is that it, right?
Yeah.
And it doesn't matter. Like, you know, you see people who are at the highest level who aren't happy because they need more consistently. And so
sometimes that comes from not setting goals or not being able to stop and celebrate when you hit a goal, right?
Yeah,
because if you don't have
putting
them,
so much weight on that goal that is like the end all be all.
Right, the big exit or something like that, right?
And that's not it. You know, you lose your sense of identity, I think.
Yeah.
That. But so anyways, I'm going through like this thing of, all right, so I'm over $50,000 a year, right?
Yeah.
And so I'm like, do I want to grow this to $1 billion or a $10 billion, company? What do I need to sacrifice for that? Does it even matter? Can I make a bigger impact if I spend my time doing something else, right? Like the kids' books has been not an afterthought, but it's like it's never been a priority because it didn't actually make money.
Yeah.
And so I haven't really driven it in over the past 18 months since we launched it. We have 4 different books. We have workbooks for each one of the books as well that goes along with it. I always wanted to do like masterminds or get-togethers where you bring the grown-ups, like the adult, like the parents and the kids. You bring them together. You do some activities together. You take the parents, do some activities with them, have the kids do some activities, bring them back together again, and really do some cool stuff on that. I just haven't done it.
Sounds like we need to.
Yeah, and I'm looking at my goals and like, where do I want to really focus? And my kid, I have Penelope also.
Yeah.
And
That's
and
right.
Hudson.
Yeah, I forgot.
And so, they say that it's something like 85% of all your time with your kids are spent in the first 18 years of their life. And I'm like, all right, so I can go back to work later. I got enough assets right now. Should I just focus on spending time with them and doing things in a limited time block that I have while they're at school, and then I'm just home. So, anyways, I guess it's one of those. It's a good problem to have, right? Like you're at a certain spot in life and business, and you can reflect enough to ask yourself those difficult questions of not even difficult, but just like ask yourself those questions of where do I want to spend my time and where can I leave the most impact?
Well, and life is a series of trade-offs, right? It is. You are trading something for something, and most of the time for us, it's emotional bandwidth.
Yeah.
Right. We are having to allocate where do we put our emotional bandwidth, because we know we can build businesses, we know we can make more money, we know we can grow the things that we want to grow from a physical and monetary standpoint, right? But we all have our limits of emotional bandwidth, right? And there is like you can't love everybody fully all the time, right? Now you have to prioritize things like your marriage relationship, your kids, the people that you are prioritizing as the relationships you need to take care of. And there are going to be some people in life that aren't as close to you that get less of your emotions than your kids, right?
Yes.
And that's the way it should be.
Absolutely.
So it's trade-off management and it's bandwidth management. And
you got to realize if you give, so much attention and so much love to somebody else who's not your kids, not your family, that means they're lacking, right? So,
and that's a danger for us leading communities is we can overextend ourselves emotionally, right? We were talking about that just with some friends the other day. It's real easy to want to be all things to all people or want to help everybody, and then to find yourself a year later or 2 years later be like, man, I'm tapped out personally, or man, I'm not giving what I should be to my wife, or and that's a trap because we feel so good about the entrepreneurial things we do, right? And we can run to that. And
we get the love, and then we get the attention, and we get the hugs there, the accolades. That we don't need it from our wife or our spouse, or and then things lack there. So man, you're very just the emotional awareness of a lot of this stuff, I think, is the key, man.
Yeah.
I
think we got to keep it in front of us.
Yeah.
Because I trip on that kind of stuff all the time, and I can really easily lapse into, even though I purposely have measures in place to get me outwardly focused, it can so easily turn back in on me. Oh, it's all about me.
Well, I think it goes back to your point of like you time block for yourself in the morning to exercise, to meditate, to read a book, to just focus on yourself, and you time block for that. The greatest indicator of our priorities is how we spend our time.
Right.
And so if your family is actually a priority, how much time are you dedicating to them?
Yeah.
Compared to your work, compared to your and I think everything needs to be almost time blocked in, hey, I got personal time where I'm going to read, work on myself, I'm going to meditate, I'm going to pray, I'm going to do whatever for myself mentally, spiritually.
Yeah.
And then physical side of things, right? And dedicate a certain amount of time every single day to just focus on the physical activity of working out for 45 minutes to an hour and making sure I'm physically there.
Yeah.
And then you need a certain amount dedicated towards finance. Obviously, this world's run by economics and money and the financial world, so you have to dedicate something to that. And then dedicate, obviously, something to the family, right?
Yeah.
Time block for the family. Where I think people really get off track or off base is they just let it spill over, and they say, hey, it's important. But the reality is, like, the finance stuff, the phone rings when you're supposed to be focused on family.
Yeah.
The phone rings when you're in gratitude for 10, 15 minutes, and all of a sudden you pick it up, right? And you let it spill over. What's helped me a lot is just like batching the activity, or not batching, but like time blocking and say, this is a dedicated time right now where I'm going to sit down with Matt Andrews and focus on, both the relationship and the financial side, and those two things are during this 1 hour time block now. This morning, hanging out with my kid for 30 minutes before he went to school, and then taking him to school and having meaningful conversations. Walking with my daughter last night on the beach when we took the dog out, and asking her questions about life and business, or not business, life and school and goals and things that she wants to do and places she wants to go. But I don't have my phone with me, right?
Right.
Like my little guy's like, hey, Dad, can you play some music on your phone this morning on our way to school? And I was like, I didn't bring it, right? Because I want to be in the zone. Yeah. He's like, damn it. And they didn't say, damn it, Dad. But that's what he meant, He's like, oh, man. And but it's trying to instill, hey, we don't need the phone, right? The phone is a distraction. I want to be focused on you. But I think, if there's a tool or a way to really prioritize things, it's how are you blocking out your time for what really matters in life,
Absolutely. No, we're going to spend time on the things that are important to us. Yeah. And it's really easy, and a lot of us can get caught in this trap. I'm sure you've done it and I've done it too. It's really easy to self-delusion of, I'm working so hard and I'm not seeing my family for my family.
For my family.
And that is like this lie that we can sell ourselves on that so easily.
Do you think your kids care if you make an extra $10,000 or $100,000 or $1 million a year?
No.
They don't give a shit.
When it goes back to,
they care about time with mom and dad.
Yeah, and if you could fast forward to the end of your life, and look back, and I've heard this illustrated a number of different ways, a number of different, illustrations, but nobody on their deathbed ever said, I wish I'd closed one more deal.
Yep.
I wish I'd added one. Oh man, if I could have just added one more zero to that bank account, or closed one more deal, or had 5 fancy cars instead of 3, or whatever it is, right? Or gone on better vacations. They all say, and they always say some version of, I wish I had more time with the people I loved, and I wish I'd spent it when I had it, and I wish I had prioritized differently. Yeah. Because now I'm done, and you can't get that time back.
Yep.
It's gone, right? And so that's it. At the end of the day, whether you prioritize it now or you prioritize it when you're just about gone, you're going to come to the realization of how well you prioritize relationships, how much relational equity and relational capital you built and spent and grew, and that will eventually lead to our real family legacy, because it's not about money, it's not about what we give to charity. It's not about how we teach our kids to make money. All that stuff is good. It's what we taught them in the time we spent with them, what we passed down to them from real interaction, right? And it's then how they can take that and help other people with it. But it's not about, the money is just like a tool, again, right? It's about that relationship. And if we're not purposeful about it, or if we delude ourselves that, hey, I don't spend any time with my wife because I'm working for my wife. Like, brother, you just lost.
Yeah,
you know,
exactly.
like you lost, and your self-delusion
Exactly.
too, and we all know it, right? Because we do it to ourselves and we recognize it. So it all comes back to that piece, man. But yeah.
No, man, that's great. Great conversation. I really
Yeah,
appreciate
man.
you coming out.
Yeah, brother. It was
Awesome
Thanks for
having you.
Coffee talk, buddy.
Boom.
Yeah.
All right, we'll see you guys on the next episode of Spill the Beans. Awesome. Hope you guys got a ton of value out of that. Matt is a dear friend of mine, and we spent the past couple of days together at this mastermind, and the guy just leads with value. He's always saying, hey, man, what, have you met this person? Let me connect you to that person. I really think so-and-so could help you. Have you ever tried this out? Check out that website. He's just an amazing, amazing giver and an amazing connector of people too. So make sure you're connected with him. We'll put his contact information in the show notes below. And like always, if you got some value out of here, put it in the comments. I'd love to hear your feedback. It's awesome to hear what some of your takeaways are. And if you know somebody else who would get some value out of this, please share the video and ask them to subscribe to the channel. So until next time, I'll see you guys on Spill the Beans.